Pablo, good to see you. How you doing? How you been? Tor, good to see you as well. Evening. How you doing? How you been? Scott, good to see you as well, brother. How you doing? How you been? One love. Hi, Miles and CMF. Hope everyone is well. Good to see you as well. How you doing? How you been? What's up, Miles? What's up, CMF? Good to see you as well, Kerry. How you been, brother? How's things? How are you feeling today? I'm doing great. Scott, how you feeling today? Hello, Miles and CMF. Orphan, good to see you as well. How you doing? How you been? Let's go, Scott. I'm just tuning in one by one. This is great. Paul, good to see you as well. How you doing? How you been? The market is doing incredible work right now. I mean, we are, unbelievably up. It does seem to be based on the regulations we're about to be having regarding cryptocurrencies. Institutions are quite hyped up to enter the crypto market space. It also is based upon that we might be getting rate cuts this month as well, which is the cherry on top. Regulations is what we need. Rate cuts is just the cherry on top. And it looks like we're about to be getting all of them. What prices can hello, Miles. Okay, we were here. Good evening, Miles and Fearless Leader. How are you? I'm doing great, Artistic. Good to see you. How you doing? How you been? Is this the start of the bull run now? What I would say is that we're getting there, essentially. Hello, Miles. Another green day. Yes, it is. Let's go, Chi. Good to see you. How you doing? How you been? What price can XRP get to soon? I would say consider variable change for the time being, but the market is on the upside, and we're getting there for regulations, which is the sky's the limit after that. Hi, Miles and CMF. George, good to see you. How you doing? How you been? Share the live. Let's go, Scott. Good evening, Miles and CMF. Callie, good to see you. How you doing? How you been? Good evening, Miles and CMF. Funky Brother, good to see you. How you doing? How you been? Please let there be more. By the looks of it, there's going to be definitely. All good, bro. Hot today at work. 12 hours in the sun. Not fun. Hope you're feeling well, bro. Let's go, one love. It's also extremely hot right now in London. It's going to get much more hotter in London. XRP Omni, let's go. Let's go, Funky Brother. When you think high price can start, we're getting there is what I would say. Hi, Johnny. Good to see you. How you doing? Semper, evening, Miles and CMF. Good to see you all, Semper. How you doing? How you been? Hi, all. Susie. Good to see you. How you doing? How you been? Good evening, Miles and CMF. Free and forever. Good to see you. How you doing? How you been? Good evening, Miles and CMF. Glad to see you all. SB. Good to see you. How you doing? How you been? And Scott, let's go with a handshake wave. Now, let me do the intro disclaimer, and then we'll go straight into the first news. A lot of things are happening around the world, which you should be aware of right now, regarding essentially cryptocurrencies, regulations, and the tariff situations. Hi, brother. Kamal. Good to see you as well, brother. How you doing? How you been? So, welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Mouse Family. My name is Miles. I'm hosting the live that you're watching right now. You can tune to this live Monday to Friday, 10 p.m. London time onwards, where I share the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding this world transforming into a digital space, and also everything that you should know about what's happening around you in terms of the world. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 331 of the CMF live show, and we also do Q&As on this live show, which means if you do have any questions or any statements to make, put it down in the comment section. More than happy to answer your questions. Now, let's go straight to Johnny's question. How long does it take before the bull run peak? We're still not there, but we're getting there is what I would say, Johnny. We still need regulations, which by the looks of it is going to be happening. We're going to talk about regulations on tonight's live as well. But anyways, let's get into the first news. Hi, Miles. Michael, good to see you. How you doing? How you been? Perfect timing on the first news. Trump news. That's the first news we're going to cover on tonight's live. Good to see you as well, Michael. Trump slaps tariffs on Brazil and 21 other countries. Now, on yesterday's live, I reviewed 20 countries that Trump has essentially put tariffs onto. Now, those countries can obviously negotiate their rates, but so far we haven't got any news or any information or any updates of those 20 countries have given some sort of essentially feedback on their rates to Washington, D.C. But we do know the 21st essentially country now, which is Brazil. Trump has claimed full credit essentially today for rally in crypto, tech stocks, and Nvidia, just as Wall Street recorded another round of record highs. In a post essentially on Truth Social, the president wrote tech stocks, industrial stocks, and the Nasdaq hit an all-time high record. Crypto essentially is going through the roof right now. He said Nvidia is up 47% since Trump's tariffs. USA is taking in hundreds of billions in tariffs. Countries is essentially, he said, the country is now back. A great credit. Fed should rapidly lower the rates to reflect the strength right now on the nation. US should be at the top of the list. No inflation, he put in capital letters. According to data from CNBC, the Dow Jones Industrial Average surged by 217 points right now, equal to about 0.5% again. The S&P 500 rose 500. Essentially, the S&P 500 rose 0.2%, and the Nasdaq essentially set a new record high after opening. Though it has hovered around the flat line by press time, the movement followed Trump's announcements of a new trade tariff, which included a 50% duty on imported copper set to begin on August 1st. Trump also imposed a 50% tariff on Brazil, stating essentially that it was partly a response to the legal proceedings against former Brazilian President Jair, now who is essentially on trial for allegedly trying to overturn the 2022 election. He said the measures also addressed a very unfair trade relationship and claimed that a trade between the two countries had been far from essentially any sort of agreements. Brazilian President Luiz Del Salvador responded to the move by saying Brazil would take action using its economic essentially laws. Markets reacted immediately. The iShares MSCI Brazil ETF dropped by 2% following the news, but the tariffs didn't stop with Brazil. Before those essentially announcements, Trump had already sent out formal letters to at least 7 other countries with details of new tariffs. Earlier in the same week, letters had also been sent to leaders of 14 additional countries, including Japan and South Korea, which I essentially revealed yesterday's live. Despite the raising tensions in global trade, US investors didn't pull back. Instead, markets climbed to new highs, recovering losses from the spring. The market is reacting in a positive way regarding trade tariff scenarios. Who saw that one coming? I did say there are 2 outcomes on the table. I said the first outcome on the table is that the crypto space doesn't, or essentially the market in general, doesn't react as a negative essentially way in any sort of a way when the tariff news gets announced. Because the first time we had tariff news come onto the news, the market was in shock. It didn't know what to do. Now, moving past that, the market is now reacting in a positive way, especially the crypto market, because it's finally been seen in some sort of a way of a hedge against traditional financial essentially stocks and so on. And tech stocks are actually doing quite brilliantly well for themselves, which is good because Bitcoin does tend to sometimes follow tech stocks. But Nvidia is going through the roof right now. Despite the raising tensions in global trades, US investors didn't pull back. Instead, markets climbed to new highs, recovering losses from the spring. Bitcoin crossed an all-time new high of $112,259. Nvidia jumped nearly 2% on the day and briefly reached a $4 trillion valuation, becoming the first public company in history to do so. Trump linked essentially the company's 47% growth to his tariff policies right now. The Labor Department reported that initial unemployment claims fell by 5%, fell by 5,000 last week to seasonally essentially adjusted 227,000, beating essentially the Dow Jones estimate of 235,000 that dropped, essentially suggested that layoffs are still low. But continuing claims which track people still receiving benefits rose to 1.96 million, climbing 10,000 essentially to the highest level since November 30th, 2021. That increase shows that long-term unemployment is still growing even as fewer claims are being filed in right now. At the same time, Bank of America has warned that inflation could rise again soon. Stefan, essentially an economist at the bank, wrote, "We expect inflation to accelerate over the coming months, in large parts due to tariff-related price increases, but tariffs aren't the only reason to expect essentially firmer inflation in the coming months. The rebound in stocks is another." Just want to point this out, that the market is reacting the way it should be regarding tariffs news, because tariffs aren't bad. They're actually good in the long run for the United States. A strong United States market space is what we need. As much as people like to, around the world hate on the United States, even their own citizens like to hate on the United States, and essentially as much as they can, and people like to hate on the US market space and so on. But a strong US market space is what we need for the entire world. As the Bank of International Settlements or the International Monetary Fund put it a very long time ago, If the American market sneezes, the world catches a cold. The world market catches a cold if the American market sneezes. So a strong US market space is what we need for a strong market space in general for the rest of the world. And tariff news is actually being seen as a positive now. Americans are buying stocks. Stocks are going through the roof. Crypto is going through the roof on Trump announcing tariffs on nations. Senate confirms essentially Jonathan, moving on from essentially US, from the tariff essentially announcements and how it's actually now being seen as a positive news, is because it's been seen as putting America first, which should have been a long time ago. Or any country leader should put their country first. Let's just say that one. Now, moving on from that to the Senate, because the Senate has now confirmed the new OCC chairman, you could say. And he is extremely pro-crypto, which is what we needed. Because the previous, essentially, chairman of the OCC hated crypto. In fact, they went as far as telling banks, essentially, and alongside the FDIC, telling US banks to stay away from crypto companies, don't open up them accounts, and don't offer accounts to retail people who essentially go into the crypto field as well. But putting all that to one side, because that was during essentially Sleepy Joe's era, Biden's era, fast forward to Trump's era, where the OCC's new essential leader is going to be a pro-crypto person. So here it is. The confirmation essentially of Jonathan signals potential shifts in regulatory landscapes, emphasizing a promising outlook for cryptocurrency integrations. Jonathan, previously a senior deputy essentially of the comptroller of the chief counsel at the OCC and chief legal essential officer at Bitfury Group Limited, has assumed the role essential controller of the currency. His confirmation by the US Senate marks a significant leadership change within the financial sector. His extensive experience, including tenure in both public and private sectors, position him to navigate essentially complex banking regulations. Now, Jonathan, a former attorney at the Jones essentially day, expressed his commitment to promoting a crypto-friendly agenda, influencing the future of regulations. Experts anticipate that essentially Jonathan's leadership could increase the integration of digital assets into the nation's banks. Jonathan is the man to put crypto in the banking space in the United States. Historical trends suggest that crypto custody and stablecoin guidance could essentially improve under his oversight. They said, "We congratulate Jonathan on his confirmation to serve as the OCC of essentially Mr. Jonathan's experience across both the public and private sectors gives him a well-rounded perspective and deep credibility at time. With a programmatic approach to the banking regulations is essential," Lindsay Johnson said, the president and CEO of Consumer Bankers Association. They also went on to say, Jonathan's confirmation may lead to more lenient approaches towards digital assets, with expectations for a clearer regulation benefiting the industry, and the market continues to await official statements or even policies from Jonathan. His track record essentially implies potential financial, regulatory, and technological shifts. Historical precedents suggest that regulatory clarity could enhance banking engagements with DeFi ecosystems, offering a beneficial impact on cryptocurrency sectors. Also, I just got a notification that essentially Bitcoin has just passed the $115,000 marker, which is impressive as well. But things are moving pretty well, you could say, inside the United States, with essentially the SEC being pro-crypto, the CFTC being pro-crypto, Trump's administration pro-crypto, America aiming for the capital of cryptocurrencies, America essentially trying to pass 3 laws regarding cryptocurrencies. This month in particular, we're going to get a White House report coming up this month particular as well. We're going to get a week of cryptocurrency regulations this month. We had essentially Brad Garlinghouse doing a speech at the Senate talking about how essentially cryptocurrencies should be treated much more fairly, which went quite brilliant. A lot of things are happening that are extremely positive essentially for cryptocurrencies right now, and this one it's just cherry on top, because the OCC was incredibly anti-crypto and told every single bank inside the United States to pretty much stay away from cryptocurrencies. And now the leader of the OCC is being replaced by essentially a very pro-crypto person who's going to connect the banking world to essentially cryptocurrencies. We're not that far off from the traditional financial space connecting to the crypto space, and it looks like all of that is about to be happening this year, which some particular crypto projects are going to go absolutely through the roof. Especially crypto projects that, due to regulations and the field that they're in the banking space, those particular crypto projects are going to go absolutely through the roof. Now, moving on essentially from that news to another news, but this one's coming out of, well, it's coming out of Germany. And they've chosen a particular, essentially, cryptocurrency that most people wouldn't see coming, because that crypto project, which I'm about to tell you about now, got dropped from Grayscale's portfolio. So 2 days ago, Grayscale essentially updated their portfolio of the amount of cryptocurrencies and which cryptocurrencies they hold. And they dropped essentially, Polygon from their essential crypto portfolio to add certain other crypto projects to add more to their portfolios in Grayscale. With Grayscale doing that, you fast forward to 2 days now, where a German bank has decided to pick up Polygon and use it. Well, here it is. NRW Bank, the development bank, the essentially bank owned by the German state of North Rhine-Westphalia, has issued €100 million worth of blockchain-based bonds, making it one of the biggest public sector moves in digital securities in Europe. A 2-year bond was issued on Polygon's blockchain and registered through the infrastructure of Cash-Link Technologies, a cryptocurrency securities register licensed by Germany's financial regulators. This is NRW's bank's first bond issuance as a fully digital crypto security under Germany's Electronic Securities Act, which also allows bonds to exit solely on blockchain without the need for physical certificates. This is not just a technical milestone, it's a sign that public financial institutions are now ready to move beyond blockchain pilots and integrate essentially these systems at scale. Now, this was essentially said by Cashlink CEO Michael. The EWPG law, which came into force in 2021, provided the legal basis for recordings of securities on distributed ledger technology in Germany, which is one of the largest capital markets right now. If you are somebody that's holding Polygon and you lost faith in your crypto project, well, it seems like a German bank has taken interest in Polygon, even though Grayscale dropped it from their portfolio 2 days ago. Now, moving on from that news to USDC. But before we talk about USDC, let's go to the comment section first, and then we go straight into that news. As I said previously, this is live, which means if you do have any questions or statements to make, put them down to the comment section. More than happy to read them out. Let's go to the comment section first before we do go for the next news, which is regarding USDC. But so far, the news, I mean, it's just positive. The crypto market is positive. Stock market is positive. Everything's looking good right now. And it all is to do with Trump. As much as some people like to hate on Trump, but the man is doing pretty well, pretty damn well. Even though everybody hated Trump's idea on tariffs, it's worked out pretty well, to be fairly honest. Let's see where we're at. We were at here. Hi, Miles. Good to see you. Michael, good to see you. How you doing? You said 1,000,000,000%. Do you still believe in your statement? About what? Good evening, Miles. Hope you're well as ever. Adi, good to see you. How you doing? How you been? Hello, Miles and CMF. Lottie, good to see you. How you doing? How you been? Do you still believe in your statement? Maybe we will need reassurance. In which statement? Funky brother, which statement are you referring to? In me saying that XRP is going to be a #1, token, Ripple is going to be a #1 company eventually, I still stand by that 1,000,000,000%. If that's the statement you're referring to. Hello, Miles and CMF Comatose. Good to see you. How you doing? How you been? How has your day been, Miles and CMF? Lena, good to see you. How you doing? How you been? It's been good. 117,000 BTC. Let's go 116,000 already. It's huge. Let's go. Good evening, Miles and CMF. Manny, good to see you. How you doing? How you been? Hi, Miles and CMF listening. Let's go, Stormy. Good to see you as well. And also, just want to take 5 seconds just to say thank you so much to everybody right now that's tuning into this live, who has already dropped a like, a retweet, and put a comment outside the live on X. And if you're watching this essentially on YouTube, thank you so much as well for liking the live. If you haven't done that, CMF members, just take 5 seconds to like the live and retweet it. Funky Brother said, please read previous messages. Let me go high up. Funky Brother, your messages were, good evening, Miles and CMF family. Your next message was XRP Army, let's go. Your next message was, you said 1,000,000,000%. And then your next message after that was, do you still believe in your statement? After that, you said, maybe we need essential reassurance. And then you said, please read previous messages. Which message you're referring to, or if you want, just drop it down again. I think your message must not be there anymore. Will another huge BTC pullback happen soon? It's a possibility. Always consider that outcome. If something disrupts the market space in terms of geopolitical tensions, and the market space will obviously react in a shock movement and essentially come down slightly. So consider that fact. Now, Ant Group. Ant Group integrates USDC to enhance global payment platform. Ant Group has announced the integration of Circle stablecoin USDC into its global platform. This move essentially marks a significant step in the international expansion of digital payment systems. This integration is substantial importance as it potentially does shift essentially significant transaction volume towards digital asset relays, especially in cross-border payments on treasury essentially options. Now, Ant Group's decision to incorporate Circle's USDC into their platform expands essentially the commitment to digital finance that it already has. Despite China's regulatory skepticism towards dollar-backed stablecoins, Ant Group's recent efforts in China to gain stablecoin approval and Circle's strict goal to expand USDC adoption globally highlights this transformative collaboration that's going on right now. Incorporating USDC could dramatically enhance cross-border payments on Ant Group's system, which processes over $1 trillion annually. This addition aligns with Circle's objective of robust, compliant global operations, potentially reshaping digital transaction flows and liquidity in key markets like the Asian market space. Circle is focused on robust compliance and global essentially adoption strategy for USDC, said Jeremy, the CEO of Circle. Circle's focus on compliance and Ant Group's recent alignment with Chinese authorities promotes confidence. As the integration awaits regulatory sign-off, the financial essentially community watching for further statements from key industry leaders. Although none have been publicly shared yet, research teams do suggest that Ant Group's USDC integration might influence a more open and flexible regulatory environment in various jurisdictions due to essentially its capacity for enhanced corporate finance efficiencies. And this movement essentially parallels the broader industry trend towards stablecoins as intermediary currencies in the global trade. So USDC could be operating in the Chinese market space and other Asian market spaces through Ant Group by the looks of it, which is brilliant for stablecoins. Honestly, it is a brilliant move from Circle themselves, pushing their currency into other market spaces, especially in China, where it's a little bit restrictive. Although it does seem like China's about to be opening its doors very, very slowly, but extremely. Now, public companies is what we're going to talk about next. But before we talk about that, let's go to the comment section first, and then we'll go straight into that next news, which is a report of how many public companies have now quietly essentially joined the Bitcoin bandwagon of boosting their stock prices. Let's see where we're at inside the comment section. We were at here. Odd comment. Good evening, Miles and CMF family. Ian, good to see you. How you doing? How you been? Funky Brother says BTC 116,000. Yes, you were right that you said XRP will take BTC. Now we know that you still believe in your statement, brother. Hats off to your confidence. Thank you so much. I just buy XRP. Is it fine? Regarding your question of I just buy XRP, is it fine? You should first understand what you're buying. For me, XRP is fine, and not even just fine. XRP is the #1 project to go to in the financial sector. But before you buy any project, look into it, research it, understand it, and if you fully understand what it's capable of doing and what it can do, knowing its licensings and its contracts and its acquisitions, then if you want to go for it, go for it. But don't ever buy anything you don't understand. And regarding Funky Brother, I 100%, 1,000,000,000% believe in what I said, that one day XRP will take the ranks as #1 and Ripple will take the ranks as #1 too. Now, public companies. Expand Bitcoin holdings as treasury assets. In 2025, over 46 new public companies began utilizing Bitcoin as a part of their treasury strategies, quietly, essentially, buying quite a bit of digital assets within their and adding it to their financial portfolios, but very quietly. Now, the reason why we know this now is because due to their filings, but beforehand they were very quiet, and some were actually very bold on the idea. So if people aren't aware, this is what's going on right now. There's a lot of companies, public companies, coming forward and creating a Bitcoin essentially portfolio, copying the footsteps of MicroStrategy with MSTR, and then boasting about it, because those companies are aiming that somehow their stocks will go through the roof because now they've become a Bitcoin company. And it has worked for quite a lot of companies. A lot of failing companies out there that were public companies, no one wanted to really buy their stocks. One day they decided to become a Bitcoin company, and then people started buying their stocks. It's the same thing that happened at MetaPlanet. MetaPlanet was a failing, essentially, Japanese company. a hotel operating company that was about to go bust. One day decides to create a Bitcoin portfolio, tells the Japanese market space and the world, we've become a Bitcoin company. Their stock goes through the roof, and now they're essentially buying a digital bank from a company that was failing. So there is essentially this theme going on where companies just coming out and creating digital portfolios just to boost their stock prices, and some of them are only doing Bitcoin only. But here is the details now that we have the report that's come out that 46 new public companies are pretty much on the bandwagon. This trend highlights Bitcoin's institutional acceptance as a treasury asset, influencing market stability, price dynamics, and corporate financial strategies. This essentially, the year 2025 saw a remarkable increase in public companies turning to Bitcoin and digital assets. Notably, at least 46 firms entered this space, seeking financial resilience through strict asset allocation. Companies like essentially BitFuFu and Cypher Mining at the forefront, accumulating essentially Bitcoin while maintaining a limited public disclosure. This quiet accumulation adds significant weight to Bitcoin's market essentially standing. As Stefan essentially Cole, CEO of Castle Highlights, said, the question essentially of whether to acquire Bitcoin is quickly going from if to when. Corporate acquisitions of Bitcoin exceeds 159,000 BTC in quarter 2 2025, impacting market liquidity and supply distribution. These activities essentially notably reinforce confidence in Bitcoin as a stable asset class. Financial markets observe a shift in liquidity towards essentially corporate-controlled Bitcoin wallets. ESG and regulatory assessments increasingly accommodate cryptos, reflecting the change in dynamics essentially of business finance. Now, one notable statement from essentially Stefan Cole, the co-founder and CEO of Castle, he said, the latter of essentially half of 2025 will mark a pivotal moment for Bitcoin's and cryptocurrencies adoption as treasury assets driven by a convergence of public market trends, shifting corporate strategies, and institutional validation when it comes to crypto assets. MicroStrategy paved the way with its bold strategy back in 2020, setting a precedent for essentially corporate Bitcoin holdings. Historical trends do suggest this growing diversification aligns essentially with the raising asset valuation cycles, with corporate BTC holdings surpassing 4% of the capped supply. Analysts predict enhanced price stability and potential new highs, essentially mirroring past outcomes seen in similar institutional engagements so far. So 46 companies, now we know from their filings, 46 companies have all become, they're all publicly listed companies, have all become Bitcoin or some sort of crypto companies, hoping that will boost their essentially stock prices, becoming a Bitcoin company like MicroStrategy. Look, all I care about is they're bringing more liquidity to the table, so good on them. Hope it works out well for them. But it's nice to see essentially that the crypto world connecting more to the traditional financial space. Now, Binance's CEO is what we can talk about next. He has a new perspective of the market space going forward. And here it is. Speaking on the Mornings with Maria, Binance's CEO, Richard Teng, described it as an exciting that countries are starting to accept cryptocurrencies as a part of their reserves. Touching on many topics from his trip to Bhutan to new regulations in the US, Teng said that global crypto adoption is accelerating. Speaking about his visit to Bhutan, Teng noted that thanks to partnerships with country ministries of tourism and the local DK Bank, Bitcoin payments are now available at over 1,000 businesses. Teng explained that cryptocurrencies is used for a wide range of transactions, from accommodation and airline tickets to tour guide payments and souvenir shopping. This system essentially is secure, cost-effective, and highly effective for both users and local businesses, he said. Teng noted that Bhutan has embraced crypto not only in terms of usage, but also in terms of reserves. He explained that the country began mining Bitcoin using green energy 5 years ago and currently holds a substantial amount of Bitcoin reserves. He also explained that the assets such as Bitcoin, Ethereum, and Binance Coin BNB have also been included in the strict reserves within Bhutan's Special Economic Zone, the GMC. Teng also touched on developments in the US, saying that President Trump is strictly approaching future technologies like blockchain and artificial intelligence. His vision for the US to be a center of crypto world offers a great opportunity not only for economic growth but also for high-valued employments and foreign direct investments. According to Binance's CEO, Congress is preparing to vote on new legislations regarding stablecoins and market structures as a part of the crypto week in mid-July, hurdling a new era for the crypto space. These developments demonstrate that the US is moving away from its past repressive, essentially, approach and embracing a supportive approach to innovation, Tang said. Also adding that the establishment of a clear regulatory framework will make responsible innovation possible once again in the US. Tang has also announced essentially that Binance users base has surpassed 280 million, essentially stating that this growth is largely due to institutional investors entering the crypto market space right now. It's not just individual investors, corporate treasuries, foundation, family offices, and even sovereign wealth funds are also showing interest in crypto right now. Global crypto adoption is currently only at 7%, but the next 10% increase will come much faster than anticipated, he said. Tang also addressed a new proposal being floated by the US under the plan supported by President Trump's institution like Franny, and essentially Freddie Mac, who would consider crypto assets in their credit worthiness analysis. The American dream has traditionally been defined by home ownership, he said. Including crypto assets in this process not only increases financial cohesion, but also increases the mainstream adoption of crypto. According to Richard Tang, regulatory clarity and political essentially support in the US will push other countries to follow in suit. If the US leads, the rest of the world will not want to miss this opportunity, he said. It is now clear that the crypto essentially offers a strict advantage in economic competition. The Binance CEO concluded his speech by saying, "We are now entering a new dawn. Global adoption will accelerate and crypto will be integrated in every aspect of your life." Those are the words from Binance's CEO, Richard Tang, pretty much you can say one of the biggest crypto exchanges on the planet. But those are his words, that essentially we are now entering a new dawn. Global adoption will accelerate and crypto will be integrated into every aspect of your life. And he goes on and talks about how, with whichever the US essentially goes for, in terms of what they're going for now, which is cryptocurrency regulations, become the capital of cryptocurrencies and become the capital of AI and so on. Saying that every country will follow in suit is absolutely correct. As I said previously, about a year ago, whatever the US does, the rest of the world will follow in suit. And those are the exact words of Richard Tang, the CEO of Binance. But yeah, I agree with everything this man just said 100%. We are definitely entering a new dawn. It's an institutional dawn is what we're entering into. And that crypto will be integrated into every aspect of your life, 1 billion%. We're getting closer and closer to regulations. This year is all about regulations. We're getting closer and closer to regulations. The banks are getting ready. The institutions have already entered the crypto space, but some are still entering. Some have already entered. Some are preparing. There's so much happening right now. It's crazy. And with the new OCC, banks will become a lot more friendly towards cryptocurrencies in the US as well. Perfect timing. Now, US bets on stablecoins to defend dollar's global role is what we're going to talk about next. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or even statements to me, put it down in the comment section. More than happy to help you out. So let's go inside the comment section first, and then we'll go straight into the next news. Let's see where we were at. We were at here. Jason, even Miles and CMF. Good to see you, Jason. How you doing? Mike says, good day, Miles and CMF. Let's go, Mike. How you doing? Samper says, Miles, possible to give your opinion on influencers telling people to store in QFS and Web3 and this and that cold wallets are no good, etc. Yes, I will definitely give you my opinion on that. So if there are any crypto influencers, I'm not going to name any crypto influencers or anybody out there, but if there are crypto influencers out there telling people to keep their cryptocurrencies on exchanges, or telling people to keep their cryptocurrencies in a QFS wallet, or telling people to keep their essential cryptocurrencies on some DeFi spaces, they're all absolute morons. The safest option for your cryptocurrencies is obviously in a cold storage wallet. None of this is financial advice at all. In my own opinion, if you keep it on an exchange, that exchange could become compromised somewhere down the road. We have had exchanges that went bankrupt. We've also had exchanges that got compromised for billions. Not millions, billions. So that's what's going to happen if you do keep your assets on a crypto exchange. Now, the argument is that crypto exchanges have the highest security and therefore it's difficult to compromise them, which would be the safest space to put your cryptocurrencies in. But that argument could be essentially, cancelled out because we've had exchanges that went bankrupt. We've also had exchanges that became compromised. And then if there's any crypto influencers out there telling people to put their cryptocurrencies in a QFS wallet, why? First of all, there's no such thing as a QFS wallet. If there is a crypto influencer out there telling people to put their cryptocurrencies in a QFS wallet, there's never been a such thing as a QFS wallet. 2 years ago, I told people there's no such thing as a QFS wallet. That scam is still going on, and there are still people in this crypto space telling other people to put their cryptocurrencies in a QFS wallet. There's no such thing. The only places you can store your cryptocurrencies is 3 places: a crypto exchange, a hot wallet, and a cold wallet. Other than that, there's no other place to store your cryptocurrencies. So stay away from QFS wallets because that's just purely a scam. Keeping your cryptocurrencies on a DeFi spot is just moronic because DeFi places can easily become compromised. Keeping your cryptocurrencies on the exchange is okay, but it can't be used as your primary wallet. Because if you keep cryptocurrencies on exchange, for trading, it makes sense. If you're doing any sort of trading, it makes sense. If you're doing staking, it makes sense. But using a cryptocurrency exchange as your primary wallet, that's a bit absurd. A cold wallet is obviously 10 times better. None of this is financial advice at all. It's just my opinion. Hope that clarifies it. Good evening, Miles and Semper. Bulexopi, good to see you as well. How you doing? How you been? Thank you for clarifying this, Miles. No problem, Stormy. Any day. Let's go. And Semper, great question, because that question probably helped out a lot of people who are watching right now. Now, US bets on stablecoins to defend the dollar's global rates. Now, everybody assumed that if we go into a digital world, it's going to be essentially the US dollar falls and something else replaces it and so on. But the number one currency, stablecoin currency in the world is USDT. And then it's USDC and the list goes on. But they're dollar coins. One thing people don't understand is even if we go into a digital world, which we're heading towards right now, the dollar is still going to lead, but in a digital format. The dollar is still going to lead as a global currency, global dominant essentially currency in a digital world also. For a US dollar stablecoin essentially to be there, then what needs to back it essentially is US bonds or US debts or essentially even fiat, which means the more, for example, Tether prints essentially USDT, they need to back it with some sort of US debts or US bonds or US yields or even fiat. The more RLUSD prints essentially USD, they need to do the exact same thing. The more USDC prints, they need to do the exact same thing. So these US dollar stablecoins are actually providing the dominance for the US dollars. A lot of people don't understand that. A lot of people think going into a digital world means the US dollars goes to zero and everybody's currency is on the table and it's like this happy days scenario. That's not the reality. It's never been the reality. The more USDT prints, the more USDC prints, the more RLUSD prints, the more any stablecoin that's a 1-to-1 ratio of US dollars prints, they need to back their essentially stablecoin with US bonds or US yields, essentially US debts, or even US fiat currencies. So they're actually providing dominance for the US dollars. And that's what's going on here. A new report from the digital asset bank Saigon highlights essentially the US government now views dollar-pegged stablecoins as essential to countering the currency's gradual decline as the world's reserve unit. President Trump and senior officials, including Treasury Secretary Scott Bessent and crypto policy essentially lead David Sachs, are accelerating efforts to grow the domestic stablecoin market. Central to its push in this Genius Act that's about to be passed as regulatory frameworks that has cleared the Senate and is awaiting a House vote. The strategy reflects a broader recognition that stablecoins can meet the real-world demand, especially from citizens in inflation-hit economies. Saigon's notes that the rising essentially retail interest in digital dollars from developing nations could help sustain the dollar's dominance if usage scales and incentives are essentially aligned. However, the US essentially approach isn't going to essentially unchallenged. Italy's finance minister has voiced concerns over the risk posed by the US dollar stablecoins, and the UAE's new dirham, essentially pegged digital currency, is also in development. Meanwhile, the BRICS alliance continues to promote a decentralized global system that sidesteps the resilience on any single currency, while the US still sees stablecoins as a digital bridge to monetary influx. Just want to also point this out. This is the reason why they don't like the idea of Tether existing, because they can't have the number one printing machine of the US dollars in a digital world as Tether that is headquartered in El Salvador. It's just stupid. The US government cannot have the number one digital dollar stablecoin headquartered in a foreign country. This is why Tether is just outside the box. It's always going to stay outside the box. Unless Tether decides to pay its way through, then maybe the doors will open for its company in the US. But other than that, Tether is just moronic company. If they want to be serious, Tether needs to move their headquarters to the US. They won't do that, obviously, because then they have to be very transparent with the US government. And Tether doesn't like transparency. It's actually allergic to transparency. But yeah, that's why Tether is just going to struggle immensely. Imagine the US government, and then the number one digital dollars is Tether in a foreign country, printing US dollars. I mean, at that point, it's just common sense that Tether is going to struggle. Honestly. Tether actually made it out to look like that, essentially when the regulations were coming in for Genius Act and they were talking about the Genius Act, Tether wrote an article saying that they've already spent billions of dollars in the US, propping up the US market space and so on, just to show to the US government that, they're there helping the US government, investing in the US billions of dollars. That doesn't mean jack squat. You can't be a number one printing digital dollars company headquartered in a foreign country when the US is just right there. It's just stupid. Honestly. Absolutely stupid. It's like somebody being the number one euro, essentially number one British pounds digital company based in Thailand, but the UK is right there. And they're printing digital pounds from Thailand. And that becomes the number one currency, stablecoin for the UK government, but they're based out in Thailand because that's where they're headquartered. It's just stupid. Now, Elizabeth Warren is what we're going to talk about now. Our favorite number one annoying person in the US government. Elizabeth Warren advocates for much more stricter oversight in the crypto market space. So as things are going incredibly brilliant right now for the crypto space, with the regulations, 3 regulations, on file, might be passed essentially this month, with the cherry on top of rate cuts also possibly happening this month, with every other thing that's positive right now happening for the crypto space, with the banks and the institutions around the world, everybody's getting involved. And then you have essentially Elizabeth Warren. And she's still advocating for exactly what Gary Gensler was advocating for, because she was obviously a part of the team, the B team. Gary Gensler, Elizabeth Warren, and well, we do have one more person left, the Fed chairman. So, Senator Elizabeth Warren advocated for increased regulatory oversight in cryptocurrency markets during a Senate banking hearing. Warren's proposal raises concerns about financial stability, aiming for regulations comparable to traditional financial systems. The hearing highlighted Warren's push for a regulatory framework addressing money laundering and financial stability. Industry leaders, also including Ripple's CEO Brad Garlinghouse, expressed the need for rules supporting innovation. Warren's framework emphasizes closing loopholes and applying securities laws to crypto assets. It's the exact same thing that Gary Gensler wanted, essentially putting cryptocurrencies in the securities category. Potential impacts include scrutiny of major assets like Bitcoin, Ethereum, and stablecoins. Past call for regulations have led to market volatility and liquidity outflows. Elizabeth Warren's focus on investor protection could reshape the market landscape, affecting traditional and digital finance. We need a crypto regulatory framework that reduces essentially these risks. But I'm concerned that what my Republican colleagues are aiming for is another industry handout that gives the crypto lobby exactly its wish list. The blessing of the government's approval, combined with crypto rules that are weaker than any other rules, and every other financial act, and must follow, Elizabeth Warren said. Warren's frameworks might challenge existing market structures by demanding equal regulatory measures for crypto and traditional assets. This shift could transform the financial and technology sectors, potentially stalling innovation if not balanced. The discussion reflects ongoing debates about aligning crypto regulations with established financial practices. Nobody cares what Elizabeth Warren has to say. Honestly, she couldn't get a single vote to back anything she has to say. I still don't know who keeps on voting for this person to, climb up the ranks when it comes to the US government. I really don't understand who keeps on voting for Elizabeth Warren. She's an absolute moron. Honestly, at one point, she should just retire and just call it a day. Honestly. But she's still advocating for cryptocurrencies to be securities. She's still advocating that cryptocurrencies must have much more stricter control over them, and that banks should not be using cryptocurrencies, and the US government should not be greenlighting cryptocurrencies, and so on. But, well, Gary Gensler left. It's only her, essentially, and the Fed chairman left. The Fed chairman does look like he's about to be pushed off his seat very soon. Trump is not giving up on the whole Supreme Court situation, removing Jerome Powell. And on her, well, you know that old saying, as I've previously said, regarding Elizabeth Warren. And then there was one. Now, Kraken is what we're going to talk about next. But before we talk about Kraken, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or even statements to make, put it down inside the comment section. More than happy to help you out. So let's go inside the comment section first and go straight into the next news. Let's see where we're at. We were at here. Good evening, Miles and CMF, Bull XRP. Let's go. How you doing? Thanks for clarifying that, Miles. Let's go see. Let's go, Stormy. Miles, I had an email from Tangent to upgrade to a new wallet. I was a little suspicious. Do you think that's legit? No. If you receive an email from Tangent saying that you need to upgrade your wallet, that's a scam. Tangent does not go out their way to email people to upgrade their wallets in any sort of a way. So that's a scam. Thank you for bringing that to my attention, but thank you, brother, because some people might have received that same email as well. There's an email scam going around right now. If you have a Ledger or a Tangent or any other essentially cryptocurrency cold wallets, you might sometimes receive random emails pretending to be from the companies that you bought your wallets from, suggesting that you might need to upgrade your wallet or transfer your assets to another wallet and so on. And that is a complete scam. Stay away from it. Thank you. I got everything on cold wallets. Let's go, Semper. If you need to upgrade your Tangent wallet, you know how you upgrade it? You don't really upgrade your Tangent wallet. You update your Tangent wallet through the App Store if you're on an iPhone, or through the Google Play Store if you're on Android. You don't receive emails to upgrade your Tangent wallets in any sort of a way. Morning, Miles and CMF. Shelly, good to see you. How you doing? How you been, Shelly? Miles, what happens if all ramps get closed on us? What can we do? They won't. In any sort of way. But if they did, you still have the DeFi space. Hi, Miles and family. Alex, good to see you. How you doing? How you been? As I said previously, I mean, the world is going to become a very controlling place due to CBDCs. They will exist. No matter people think it won't happen, CBDCs won't happen and this and that, it's going to happen whether you like it or not. And even the CBDC law, the anti-CBDC law that's been passed inside the United States, it does state that the Fed can't essentially create a CBDC, but it leaves room for error for anybody else or a private entity to come in and create CBDCs. So that won't happen. Also, in a digital world, in a CBDC world, it's not about controlling everyone. It's about controlling the retail section. So that leaves room for error for people who are inside the crypto space and people who are on the higher end. So they won't close all ramps on you. And if they did, you still have the DeFi space to move about. Hi, Miles and family. Alex, good to see you. How you doing? How you been? I had one as well, but I ignored it. Let's go with Shelly for ignoring it. Some people read it. Some don't even open emails like that is what I would say as well. But good on you, Shelly, for ignoring it. XRP hit $2.56. Stormy, thank you for the update. I received an email from Tangent, but it was just saying a new feature to buy crypto. That one could be normal, but still stay away from it. Now, Kraken. Kraken has received a license from Argentina. Thanks, Miles. No problem for you over. No problem at all. Kraken has officially registered as a virtual asset service provider in Argentina through the essentially Comisión Nacional de Valores, expanding its footprint in the Latin American crypto essentially market. Kraken Exchange's expansion into Argentina strengthens its region's crypto infrastructure, providing more users with local crypto access and potentially increasing trading volumes. Kraken has positioned itself promptly in Latin America by registering as a virtual asset service provider in Argentina. This move essentially aims to capitalize on active crypto communities in the region, particularly in Argentina and Mexico. Mark, the global head of consumers at Kraken, highlighted the significance of this expansion, underscoring Argentina and Mexico as among the most resilient crypto communities. Kraken will enhance local currencies, funding using domestic payment methods to simplify user access. Argentina and Mexico are among the most active and resilient crypto communities in the world, with local relays and regulatory clarity in place. Kraken is uniquely positioned to help clients in both countries access the global crypto economy with trust, security, and ease they deserve. Kraken announcements the registration is anticipated to impact local markets by increasing trading volumes and liquidity for cryptocurrencies such as BTC and ETH. However, there is no on-chain data available to essentially quantify this impact yet. Financially, this move provides a new local essentially currency ramps for users in Argentina, allowing for deposits in domestic payment methods, which essentially are automatically converted to USD. This essentially action will influence trading of altcoins listed on essentially Kraken Exchange. Historically, compliant expansions by crypto exchanges have resulted in short-term increases in trading activity for main cryptocurrencies. This trend could similarly unfold in Argentina following Kraken's regulatory compliance. The development underscores the broader trend of cryptocurrency exchanges seeking compliance in emerging markets through official licenses. Providing more regulated access to crypto platforms, further observations of trading volumes and liquidity will determine the full impact. Kraken Exchange has just essentially expanded itself into Argentina. Recently, they expanded themselves into the European market space, and now they're going into the Latin American market space. Brilliant. All that just means is more liquidity will be entering the crypto market spaces. The more crypto exchanges apply for licenses and expand their reach, the more liquidity that's going to be entering essentially into the crypto market space. So brilliant to see, especially towards cryptocurrency projects that are sitting at the top 10 or top 20. Now, moving on from that to HSBC Bank. HSBC Bank has just piloted, and just for reference, HSBC Bank is a partner of Ripple. HSBC Bank pilots the Hong Kong dollars plus stablecoin across various blockchains. Chinese CBDC coming soon. HSBC, the largest bank in Hong Kong, has successfully completed a series of blockchain experiments under the Hong Kong Monetary Authority under the name of Project Hong Kong Dollars. These tests were designed to explore the technical and commercial feasibilities of issuing a central bank digital currency, CBDC, a version of the Hong Kong dollar. HSBC conducted the experiment across a range of both public and private distributed ledger technologies environments, including Arbitrum, Ethereum, Lena, and Polygon. The move reinforces the bank's commitment to shaping the future of digital money and highlights its role essentially as the first local bank to launch on-chain settlement services in the region. The pilot focused essentially on how Hong Kong digital dollar could function in the real-world scenarios. HSBC explored how Hong Kong dollars could serve not just as essentially as a store of value, but as a means of transfer, but also as settlement utility for tokenized assets. Key areas of investigation include scalability across both public and private blockchains, the role of privacy-enhancing technologies, PET, and the use of decentralized identities, DID, systems to maintain security and user privacy. To essentially complement its technical exploration, HSBC covered or surveyed over 700 Hong Kong residents and investors. Findings revealed that 90% of respondents valued privacy in digital currency transactions, while just 42% of the general public said they were familiar with the Hong Kong dollars, the digital Hong Kong dollars. That figure rose to 65% among professional investors. Notably, 1/3 of the participants expressed willingness to use the Hong Kong dollars for trading digital assets, citing the previous essentially safety of government-backed and blockchain-based currencies. Beyond Project Hong Kong Dollars Plus, HSBC said it's playing a leading role in Hong Kong's broader digital asset initiative. The bank is a member of the Hong Kong Dollars Industry Forum and has supported related programs such as Project Enbridge and Project Embers. It also essentially helped issue the HKSAR government digital green bonds and recently launched a tokenized deposit service for corporate clients. Hong Kong's first bank-led blockchain settlement solution. HSBC executives Luna Lim and John O'Neill stressed the bank's essentially dedication to financial innovation and the advancements of secure, scalable digital currencies. More findings from Project Hong Kong Dollars Plus are expected to be released later this year, potentially laying the groundwork for a larger CBDC rollout in the region. Hong Kong Securities and Futures Commission (SFC) has recently issued another license on the crypto trading platform regime, granting approval to HKVAX following the OSL and Hashkey licensings. So Hong Kong is about to be rolling out a CBDC this year. They're also about to be rolling out a Hong Kong e-dollars with HSBC Bank, who's also a partner of Ripple. Keep that in mind. CBDCs are going nowhere. They're still going to be launched worldwide. Now, moving on from the Hong Kong news and HSBC news to Senate push for digital asset regulations by 2025. This year is all about regulations. At the beginning of the year, I said this year is all going to be about regulations, and that it's the most important thing for the crypto space to be able to move forward, and most importantly, detach itself from Bitcoin. Because we don't have regulations, we have no utility inside the crypto space, which means majority of crypto projects are still bound to follow Bitcoin's footsteps. If we get regulations, we get utility, we get detachment from Bitcoin's footsteps. So, Senate Banking Committee Chairman Tim Scott, along with senators, urges a push for digital asset regulations this year. US lawmakers are called upon to advance legislative frameworks to crypto innovation and market stability. The push for regulatory frameworks is crucial for clarifying digital asset markets, impacting institutional and retail crypto participation. The Genius Act focuses on stablecoins regulations, which could significantly affect US regulated stablecoins. Senate Banking Committee Chairman Tim Scott and Senator Cynthia Luminis are leading essentially a baptism innovative for comprehensive digital asset legislations. They aim to implement stronger crypto market frameworks by 2025. This follows previous baptism efforts and financial regulations. In a recent hearing also, senators stressed the need to distinguish between securities and commodities in digital assets. Tim Scott emphasized the importance of compliance to protect investors while promoting innovation inside the United States. We need to clarify the regulatory frameworks for digital assets to foster a cohesive environment for innovation and growth inside the crypto space, Tim Scott said, the chairman Senate of the Banking Committee. The initiative may impact financial policies concerning major cryptocurrencies like Ethereum, Bitcoin, and stablecoins. Such regulations could also influence how markets function and their infrastructure develops. Debates surrounding the Genius Act highlights the potential broader implications for the crypto industry. The push towards regulations is being monitored closely by the market due to possible shifts in asset management and compliance requirements. Speculation on essentially particularly concerning stablecoin governance. Future legislative changes may result in notable shifts in the regulatory landscape, leading to new market strategies and technologies. Major economic stakeholders are also assessing the impacts based on previous legislative engagements. This year, even according to Tim Scott, a Senate Banking Committee, even according to him, this year inside the United States, it's all about crypto regulations being pushed forward and passed into law. 3 crypto regulations is what they're looking at. All 3 get passed. The most important one that we need, it's the Genius Act for stablecoins. Brilliant. We need that. The Clarity Act is what we need more. So there's no more gray areas inside the crypto space when it comes to banks and institutions, and they know what to do, what not to do. But it's good to see that essentially the Senate, the Banking Committee, Tim Scott coming out and saying that this year is all about crypto regulations. And 3 are on the table to be passed. And we're also about to be having the crypto week of regulations, according to Trump and his administration, starting on the 14th. 14th of July is going to start the week of crypto regulations. A little bit later on, we're going to get a crypto report from the White House. And then we have senators coming out and saying this year is all about crypto regulations passing forward. Now, the next news we are going to be covering on tonight's live is regarding CBDCs, but also regarding Australia. Before we go through the next news, let's consider the comment section first. As I said previously, this is live, which means if you do have any questions or statements to make, put it down in the comment section. More than happy to help you out. So, Funky Brother says, thank you, Miles. Once again, you have been guiding me through for the last 2 years now. Thank you, brother. No problem, Funky Brother, anytime. Bull XRP says, Miles, should I add a second Tangent card to the same account on the same phone or a different phone? You have to add it to the same account. So when you buy a Tangent wallet, you could buy it with 2 cards or 3 cards. All three. If you buy a Tangent wallet with 3 cards, all 3 cards should be on the same account. If you buy a Tangent wallet with 2 cards, then they both should be on the same account again. If you buy a separate Tangent wallet that you receive 2 more cards, that's your choice to add it to your current wallet or add a new wallet. But if you ordered a Tangent wallet with 2 cards, they should be on the same account. If you bought a Tangent wallet with 3 cards, they should be on the same account as well. Now, facts all about crypto regulations. Let's go, Ray. Reserve Bank of Australia launches CBDC Phase 2 testing. Apparently, Australia's central bank is moving ahead with CBDCs and getting close, very close. The Reserve Bank of Australia has announced its plans to launch the second phase of Project Aisha. And this project essentially will test the use of stablecoins and central bank digital currencies, CBDCs, in real situations, is where they're at right now. This is a crucial step in Australia's digital finance journey as the country seeks to explore how digital currencies can integrate into the financial systems. Notably, the Reserve Bank of Australia is focusing on wholesale finance for now, where digital currencies could improve transactions efficiencies and lower settlement risks and increase transparency. Phase 2 of this project will elevate practical uses in areas such as trading tokenized assets, cross-border payments, and instant settlement systems using blockchain technology and distributed ledger technology. To encourage innovation during this experimental phase, the Australian Securities and Investment Commission, ASIC, has granted temporary regulatory exemptions to participating entities. This will enable financial institutions and fintech firms in Australia to test new uses for digital assets that do not fit within the current legal and regulatory essentially rules. Some major players are participating in the pilot program, including Commonwealth Bank, Westpac, and ANZ, among others. Meanwhile, the move comes amid a global trend of stablecoin adoption. Likewise, central banks and regulators are increasingly seeking to benefit of digital assets. Australia's crypto ownership is on the rise, with 31% of adults, or around 6.2 million people, having owned digital assets at some point. According to data from independent reserves, this figure is up 28% from last year. Edward Carroll of the MHC Digital Group highlighted Charlton's understanding of blockchain transformative potential and the urgency of crafting clear regulations. Meanwhile, Damien of the Tech Council of Australia said the addition of digital economy to Charlton's title signals strong governmental support for the sector's role in economic growth. Furthermore, the Australian Transaction Reports and Analysis Centre announced that it will shift its enforcement priorities towards crypto in 2025. Australia has just announced they're shifting their priorities to cryptocurrencies this year, 2025. Recall that the Reserve Bank of Australia confirmed it would not be pursuing a retail CBDC for now, but they will. The bank affirmed that it will channel its resources into developing a wholesale CBDC. The decision to focus on a wholesale CBDC comes after extensive research concluded into the retail version that would not deliver a significant innovation for public use. On the other hand, a wholesale CBDC offers a range of advantages for commercial and central banks. It reduces the counterpart risks, enhances liquidity, increases transparency, and has the potential to lower operational and compliance costs. Australia has just announced they're shifting their focus. They're putting their priorities inside the crypto space for this year. They're also moving heavily ahead with their CBDC, wholesale CBDC. And also, once again, Australia or any other country out there that keeps on mentioning they're going to wholesale CBDCs because retail CBDCs don't provide the privacy or don't need it for the use cases for the retail section is an absolute load of BS. The reason why countries are releasing wholesale CBDCs first and then going to be essentially releasing CBDCs for retail section is because they want to get every business around you accepting CBDCs, and then they'll release the retail section. It's not because they care about your privacy. Name one government that cares about your privacy. Name one politician that cares about your privacy. Nobody does. Telegram was the #1 essentially decentralized messaging service. Telegram was. What happened to the founder of Telegram? Got arrested when he landed in France. Why? Because the French government or every other government around the world wants access to Telegram. What happened to TikTok? The Americans have to buy. Look, the idea of privacy doesn't exist. It never has and it never will. Maybe a very, very long time ago, maybe during the Persian Empire times or essentially the Roman times, there was such thing as privacy. But we live in a digital world. There's no such thing as privacy. There's not a single government on the planet that essentially says, no, we care about our citizens' privacy. In reality, nobody does. Okay, so keep that in mind. Now, threat actors using essentially elaborate social engineering schemes to compromise your crypto wallets. There is a new scam going around inside the crypto space that everybody should be aware about. So, hackers are now, or scammers, are emailing you or messaging you, especially on X, and asking you to try out this new crypto project by sending you a link. They're doing it mostly through X, apparently. But they're sending people links of crypto projects or links of essentially websites of crypto companies and telling people to test it out, and that they'll pay them for testing out the crypto project or crypto platform. And that link, once you click on it, will install some sort of a malware on your devices that has access to your crypto wallets later on. So here's the new scam that's going around. Threat actors are using an elaborate social engineering scheme to target crypto users and drain their wallets. According to a Thursday report from the cybersecurity company Darktrace, the company wrote that the techniques are similar to those used by traffic groups, which uses malware to steal credentials and data from people. The social engineering scheme involves gaining the trust of users by posting representatives from fake startup companies in industries of AI gaming and Web3 and social media. So it'll just be like a new company. So they'll approach you on X and say, we are a new crypto company, we're a startup company, and we want people to test out our platform, and we'll pay you for testing out our platform because we're a new startup company inside the crypto sector in AI or Web3, and we need users to, test out our features. It's a scam. The moment you click on their website, the moment you click on anything they send you, that's it pretty much. They can hack your devices and get access to what they need. The social engineering scheme involves gaining trust of the users by posing, essentially representing fake startup companies. Compromised X accounts are often involved, and the threat actors supplement the fraud with Medium articles and GitHub entries. So even when you read crypto news, for example, and there's like adverts in your crypto news, one of those adverts could also be those scam companies as well. Don't click on any ads either when you read crypto news. Don't click on any random links. Don't click on links. Don't click on any links if they send it to you through X, social media. If you don't know the person, don't open the message. Don't click on it. If you also receive, or also if you go to any news companies that essentially you're reading articles about cryptocurrencies and there's adverts, don't click on any adverts, because those links can also be linked to malware that company might not be aware of promoting those adverts. Each campaign typically starts with a victim being contacted through X messages. Telegram or Discord could be used as well. The report reads, a fake employee of a company will contact the victim asking to test out their software in exchange for a cryptocurrency payment. After the user downloads the software, a Cloudflare verification bubble pops up that begins to extract information about the computer. At a certain point, credentials from cryptocurrency wallets are stolen. Windows and Mac users are known to have been targeted, according to reports. The scheme essentially may be similar to the December 2024 attacks involved in the Meeting campaign. There have been other social engineering attacks targeting cryptocurrency users right now, including those allegedly orchestrated by certain groups associated with North Korea. Crypto scams, frauds, and thefts are right now up through the roof. In some cases, they've become more sophisticated, relying on social media. Chinese authorities have also warned their citizens about illegal fundraising schemes that in part were built around crypto killer use cases and stablecoins. Allegedly, the organizations often essentially fronts for money laundering and online gambling, and the groups take advantage of the public's limited knowledge of certain aspects of cryptocurrencies. Cointelegraph has also written about the crypto scams to watch out for in 2025. They include malicious browser plugins that propped up to be for security, tampered hardware wallets, and social engineering through fake revoker websites. The US Department of Justice unsealed a such indictment against 2 men for allegedly running a scheme that defrauded investors of over $650 million. Another scheme has also been in the fake crypto support scam, which uses psychological tactics to complete the fraud, which is putting fear in people's minds that their wallets might be compromised and they should transfer all of their assets to another crypto address, which is also a scam as well. But please be aware of this new recent scam where they're approaching you, pretending to be from a company they're not, or they even might start up a fake company, a startup company, and contact you and say, please test out our crypto platform. We're just trying to get user feedback. We'll pay you for it as well. It's a scam. Stay away from it. But that's the newest recent scam that's going on. Now, Japan is what we're going to talk about next on tonight's live. But before we talk about Japan, let's go inside the comment section first. Miles, thanks for your opinion and support. No problem, Bull XRP, anytime. Orphan says, with all milestones that are coming to crypto and we don't have the rate cuts yet, some people are saying that they will treat this like a 4-year cycle. Is this one different? Tell us why, please. Why is essentially what's happening right now different from the previous cycles we had inside the crypto space? You see, for previous cycles to play out, we have to see it as something that's already happened. So before we had rules and regulations, before we had any sort of regulations inside the crypto space, before we had any sort of regulations, ETFs, ETPs, institutions, family offices, sovereign wealth funds, anything to do with the financial sector being inside the crypto space, or any government being inside the crypto space, we had normal cycles inside the crypto space, where it was all based on essentially Bitcoin moving up on an uptrend, and essentially that 4-year cycle we had of the bear market, the bull market, the bear market, the bull market. And then you fast forward to when we got our first ETF inside the market space, everything changed. The moment we got Bitcoin ETFs, Ethereum ETFs, ETPs for a tremendous amount of cryptocurrencies around the world, every country into cryptocurrencies, companies creating essentially some sort of crypto portfolio, sovereign wealth funds creating crypto portfolios, family offices creating crypto portfolios, VCs entering the crypto space, funding essentially crypto companies, crypto projects themselves, essentially expanding into the financial sector, expanding into every sector they possibly can, tokenization happening, stablecoins going on a whole nother level because of the Genius Act that's about to pass. So with everything that's been happening inside the crypto space, we're definitely in a different ballgame. And it's not just my words that I've been saying for over a year or 2 years. You can even say that we're going to go into a different ballgame. Grayscale even said we're going into this is a different ballgame. We've never had ETPs, ETFs, regulations, institutions, banks, VCs, sovereign wealth funds, hedge funds, family offices inside the crypto space. Never been before. If you add all of these features to the crypto space, how could we not be in a different ballgame? And let's not forget, we still haven't had utility. The moment we get regulations, utility is next, which certain crypto projects are going to just blast through because they've been held back due to regulations. A project like XRP, for example, has been held back due to the lawsuit and regulations. And also the banks not being able to work crypto companies due to what the FDIC and OCC said during Biden's essentially era of the presidency, Sleepy Joe era. But the idea of we're in the same cycles is just stupid. It's not just my words, as I said. Grayscale even came out and said, we're in a different ballgame. We're moving to an institutional sector, a regulated sector. But the moment regulations come and utility kicks in, it's a different ballgame. All those contracts that Ripple signed and people said, well, the price of XRP hasn't moved. They just signed another contract, but the price of XRP hasn't, because we don't have regulations. And also, when a company signs a contract, it doesn't mean this, like, essentially the asset is going to go through the roof. It's not Hollywood, it's real life. When two countries sign, essentially when two companies sign a contract, or a bank and a company signs a contract, they're going to go into essentially a stage of research and building whatever they're aiming towards, which will take 1 to 2 years or 3 years or 4 years, depending on what they're trying to build and move forward with. And then you'll see essentially the benefits of their contract coming in and benefiting their price on the stock market, or in this case, the crypto markets. But all those contracts, Ripple signed, XLM signed, XDC signed, and all those essentially contracts that once regulations kick in, utility kicks in, those contracts will come effective into play. And then you're really going to see the different ballgame. You're genuinely going to see that different ballgame when regulations come through, a utility starts kicking in. The amount of crypto projects that will detach from Bitcoin will be tremendous, you could say, but some crypto projects will go absolutely through the roof. Not overnight, over time. Now, there are many reasons, honestly, why this is a different ballgame. And as I said previously, it's not just my words that saying it's a different ballgame. Even Bybit's CEO said we're in a different ballgame. We're in an institutional run. We're in a regulated run. We've never been in this type of essentially market space inside the crypto space ever. So it's not just my words. Bybit has said it before. Grayscale has said it before. Even JP Morgan's analyst has said it before as well, that we're in a different ballgame. This is an institutional run, a regulated run. We're going towards regulations, and pretty much next is utility and so on. We've never had ETFs. We've never had ETPs. We've never had all these features inside the crypto space. So the idea of comparing it to a cycle that we've never had before is just stupid. But the biggest thing that we need is regulations. The rate cuts will just be a cherry on top. 4-year cycles are over. Facts, Christopher. Miles, how is this Israel/Iran war going on? Regarding Israel and Iran war, it has brewed down for the time being, but it definitely will spike back up again. Now, Japan, and the reason why I know that this Israel and Iran war isn't over yet is because I have family members in Iran, and they have told me that Israel contacts essentially people, the Iranian people, because the Israeli government is on the Iranian people's side. In fact, some people don't know this. One of the generals, essentially from Israel, is Iranian. An Iranian, essentially Jewish person. We do have Iranian, essentially Jewish people. We have Iranian Christians, we have Iranian Jewish, Iranian Christian, Iranian Catholics, Iranian Muslim people. So we have all types of essential religions in Iran. But in fact, a lot of people don't know this, but one of the Jewish, the Israeli government's generals is actually an Iranian person who does actually a lot of speeches telling the Iranian people what's happening and so on. But anyways, the Israeli government has been in communication with essentially Iranian people through Telegram, asking the Iranian people what help they need and where to strike next. Now, so that's definitely not, essentially ended in any sort of way. That's just brewing back up again. Thanks, Miles. No problem with it. Anytime. Now, Japan. Japan's gate to tokenize $75 million in Tokyo real estate on a blockchain project that nobody's ever talked about. So a Japanese, essentially, real estate firm came forward and decided to tokenize their assets on a crypto project that nobody holds, you could even say. So OASYS blockchain, Japanese real estate investment firm Gates Inc. will tokenize $75 million worth of central Tokyo properties on Oasis blockchain, marking one of the country's largest real estate tokenization initiatives to date. The partnership announced essentially represents a major step for both companies. Gates plans to eventually tokenize over $200 billion in assets, about 1% of Japan's real estate essentially market, while Oasis continues to expand beyond its gaming roots into real-world asset tokenizations. Gates, which essentially generated $145 million in 2024 revenue and was listed on the Financial Times as a high-growth company in Asia-Pacific in 2023, and lists essentially is currently conducted on Nasdaq Roadshow after filing his F1 essentially filings. Gates CEO Yoshi told Cointelegraph that the company has secured the necessary financial and real estate essentially business licenses in Japan. The real world asset essentially project will be executed through a special purpose vehicle SPV established overseas. We are actively preparing to ensure full compliance with local regulations and secure a required licensing in relative jurisdictions through a strong partnership, he said. Royal, the founder and representative director of Oasis, told essentially Cointelegraph that the Oasis team is building a token economy that automatically reinvests returns to maximize essentially compound efforts. The company said they plan to expand the tokenization model internationally, targeting the United States, Europe, the Philippines, and other parts of Asia. Over time, the initiative could also include tokenizing essentially Japanese intellectual properties, such as gaming and anime essentially assets. Global interest in real estate tokenization has surged in recent months. In Dubai, tokenized real estate sales have reached $18 billion, while in New Jersey has begun digitalizing $240 billion worth of property deeds. According to a report released on April 26, 2025 by the essentially dedicated Center for Financial Services, the global market for tokenized real estate is expected to reach over $4 trillion by 2035, a massive leap from less than $300 billion in 2024. This growth represents a compound annual growth rate of more than 27%. Polygon Labs' CEO also Mark said in an interview with Cointelegraph on March 3rd that tokenization is poised to revolutionize real estate investing. He emphasized that the real estate market needs to overcome the liquidity issue that often lead to liquidity essentially discounts, and tokenization could be the key to increasing liquidity. As tokenization accelerates, institutional investors are increasingly interested in the space. On June 5th, Pan-European fund manager APS acquired $3.4 million worth of tokenized real estate assets through MetaWealth's essentially blockchain-based investment platform. So a Japanese company has decided to invest into tokenization. They chose a blockchain project by the name of Oasis Blockchain, and they're going to be their first essentially opening is going to be roughly $75 million worth of tokenization on this particular blockchain. Now, moving on from that to US lawmakers. US lawmakers to discuss crypto tax policies aimed a push to pass 3 bills. As I previously, there are 3 bills right now on the table to be passed inside the United States. So, lawmakers in the US House of Representatives are scheduled to hold a hearing on crypto tax policy frameworks as a part of the Republicans' push to consider bills on central bank digital currency, CBDC, stablecoins, and market structure. In a Wednesday's notice, leaderships on the House Committee on Ways and Means and Oversight Subcommittee said they had scheduled a July 16th hearing. So keep that on your calendars. A July 16th hearing to focus on affirmative steps needed to place a tax policy framework on digital assets. The event ensuring digital asset policies built for the 21st century will come as the House representatives are expected to vote on 3 crypto-related bills. It was unclear at the time of publication what witnesses would be invited to testify at the hearing. The U.S. Senate Banking Committee discussed market essentially structure legislations, hearing essentially also from other CEOs, and one of the most Republican lawmakers in both the House and Senate essentially have offered different legislative paths to address regulatory issues affecting the crypto and blockchain industry. During debate over U.S. President Donald Trump's essentially budget bill, Wyoming Senator Cynthia Lummis proposed a provision to address the double taxation for cryptocurrency miners and stakers. The bill passed the Senate without any such amendments, and Lummis submitted a standalone draft bill on digital asset taxation days later. Republicans' push for a crypto week of legislation starting Monday will see lawmakers in the House discussing the Genius Act for payment stablecoins, as well as the Anti-CBDC Surveillance State Act and the Digital Clarity Act as well. Though the Clarity Act originated in the House, leadership of the Senate Banking Committee said in June that the chamber intended to proceed with its own plans for a crypto market structure, setting a September goal. 2 versions of the Anti-CBDC Surveillance State Act were separately included in the House and Senate, but neither bill was passed either the chamber. The Genius Act, in contrast, awaits a full House vote after a possible amendments and debate having passed the Senate in June. Trump called on essentially House lawmakers to pass a clean bill with no add-ons, suggesting that it would sign on immediately after a vote. 3 bills are going to be passed, as I said previously, but keep July 16th also on your calendars. So not only, as I said, do we have the crypto week coming up, we also have July 16th coming up for crypto tax policies this month as well. We also have the White House releasing a crypto report this month as well. This month is very crucial for regulations and reports on the crypto space. Now, moving on from that to the Ripple CEO. Ripple CEO has came out with a new perspective on stablecoins. So here it is. Ripple CEO Brad Garlinghouse projects that the stablecoin market could reach a valuation between $1 to $2 trillion within a few years, as per his remarks on CNBC Squawkbox. The prediction points to enhanced crypto finance integration and potential market changes, with Ripple's launching RLUSD and partnering with BNY Mellon for custody, which I revealed yesterday. Ripple has officially entered the stablecoin space with the introduction of RLUSD in December 2024. Transitioning from utilizing third-party stablecoins, Brad Garlinghouse, Ripple CEO, expresses strong confidence in the significant market evaluation. The stablecoin market could experience significant growth, potentially reaching $1 to $2 trillion in market capitalization within a few years. BNY Mellon has partnered as a custodian for RLUSD, potentially boosting its institutional credibility. This strategic partnership also underlines Ripple's commitment to fostering institutional engagements for stablecoin sectors. Garlinghouse's forecast could significantly influence institutional investment decisions, potentially raising the stablecoin market capitalization from its current $250 billion market space. Ripple's RLUSD stablecoin quickly reached $500 million market cap as well, indicating a robust institutional support. The move is poised to accelerate crypto adoption across traditional finance as Ripple demonstrates heightened focus on institutional integration. Increased liquidity on-chain activity are anticipated, enhancing the stablecoin ecosystem. Past surges in stablecoin sectors driven by DeFi activities in 2020 and 2021 provide some sort of essential patterns of potential growth, as historical seen with tokens like USDT and USDC. Growth in stablecoins often leads to broader crypto asset liquidity enhancements, with key players like Ripple reinforcing ties with traditional finance entities. The stablecoin market could see substantial growth, aligning with Brad's projection. Historical trends also suggest that an increase in usage across tokens such as XRP, Ethereum, and Bitcoin. So, Brad's new perspective, the crypto market space, called the stablecoin market space, is en route to a $2 trillion market space. Every time the crypto market goes on the negative side, USDT and USDC start printing more tokens. And then the market goes on the positive side, you can see what is entering the crypto essentially project. It's the new printed money that's essentially entering those crypto projects that boost the crypto market space in general. But Brad's new perspective, we're on the way to a $2 trillion market space for stablecoins. Let's go to the comment section. Miles, I don't understand tokenization. It is only for institutions, or should we be tokenizing all our real world assets personally to monetize from it? Regarding tokenization, it's very simple. So the idea is that, for example, if somebody wants to buy a house, let's just say, it could be very expensive. So there's many reasons for tokenization. One is essentially because it's transparent and it's easier on form of liquidity. Let's say if you want to get a loan from a bank, and nowadays, in these times, a bank would ask you essentially, do you own a property, and so on. Do you own a property? Do you have your bank statements? Do you have your pay slips? Which company do you work for? And so on and so on. Or if you want a mortgage or so on. And the bank will ask you 21 questions, and they'll need some sort of information from your lawyers, depending on what you're trying to get from the bank, or some sort of information from your accountant. In a tokenized world, the bank could just essentially access all of your details or all of your assets within seconds. So it makes a much more transparent world. Because a lot of people, for example, lie to get loans from banks. Like, for example, during COVID, a lot of people lied that they said that they owned businesses that were doing very well, or they owned properties and so on, which, the banks gave out tremendous amount of money to a lot of people that lied and got COVID loans. If we lived in a tokenized world, that would have never happened, because nobody could lie about their assets, because we live in a tokenized world where everything around you will become tokenized. So that's the aspect of essentially, the transparent side of tokenization, and also easy access to liquidity. The second thing regarding tokenization, let's say, for example, there's a house, and this is a very expensive house, and maybe one person can't afford to buy this house. So instead, the real estate company could tokenize this house and sell it in parts to people that want to essentially be able to essentially buy a part of this house and get returns on it. So it's when it comes to tokenization, it's the accessibility of an asset, for example. Or like essentially, Hilton Hotel. Hilton Hotel decided to, build a hotel. If I'm not mistaken, it was in either El Salvador or Argentina. They're building a hotel next to an airport. And Hilton Hotel said they're going to make their project into a tokenized project, which means people can actually buy parts of that hotel. And that money could also be used for funding to build the hotel. So, for example, a big corporation, there's also the negative side of tokenization, and this is the negative side of tokenization. So, for example, a huge organization, let's just say, comes forward and says, we're building a brand new, shiny building in Manhattan, New York. And we're going to make it a tokenized project, which means it opens the doors to the retail section to buy parts of this essentially property and so on. What they essentially have done is made their own lives easier, because instead of, for example, going to the bank to borrow lots of money to build a brand new shiny building in Manhattan, this company could just make it into a tokenized project and get the retail section involved, and also some institutions involved. For example, the Hilton Hotel that was going to be built, or is still in process of being built, or hasn't even started. They said if somebody, for example, invests $5,000 into this tokenization Hilton Hill project, they will essentially get, a free drinks at the bar. If they spend $10,000, they get essentially 2 nights stay or 3 nights stay at the Hilton Hotel for free. As a retail member, you get absolutely nothing in return. If a huge corporation comes out and builds a brand new shiny hotel or a brand new shiny building or a business, you get pretty much nothing in return, depending on what the terms are. Maybe if Hilton Hotel said, you get essentially 5 nights stay every month at the Hilton Hotel, somebody would go, okay, that makes more sense for me to enter into it, and I get a little bit back on my tokenization project. But if they're offering you free drinks at the bar and you want to spend $5,000, why? Just go to the Hilton Hotel, have 2 free, and just pay for 2 drinks. It'll be cheaper than $5,000 because you get nothing else in return. So it depends on the contract. So there's the negative side, essentially, of the tokenization aspect as well, which is that companies could just squeeze money out the retail section, promising them nothing. And the person that wins at the end is the company that owns the building, which you funded, and they own the building. And all you got in return was 2 free drinks at the bar, the Hilton Hotel. So there's also that side of essentially tokenization, which a lot of people never talk about, where it's just another form of a way to squeeze money out the retail section, making them think they're a part of something bigger. So there's 2 sides to tokenization. There's a legit side of tokenization where, if you want to borrow money from the bank or an exchange or somewhere, and, your assets are all tokenized, which makes it more transparent, much more easier for you to be able to borrow. And then there's the other side, essentially, of tokenization, where big corporations, instead of borrowing money from the bank, could just use the retail section money and promise them nothing in return. And at the end, the big corporation gets a big, brand new, shiny building, and you get 2 free drinks at the bar. So there's also that side of tokenization, which nobody ever talks about. But again, it depends on the terms. Maybe that company is a decent company and says people can get this much returns on their assets every year, if they fund into this tokenization project. But the Hilton Hotel want 2 free drinks at the bar for $5,000. But that's what regarding tokenization. It's just tokenizing your own, and you can tokenize your own assets as well. That is true. So the next part of your question was, is it only for institutions? No, it's not only for institutions. Anybody can essentially tokenize their assets if they wanted to. I'll start with that's what it was. Thank you so much for the hotel. It's like selling shares of an asset, pretty much. Very similar. But a lot more transparent, a lot more easier in terms of liquidity as well. Now, on that note, we have also reached the endings of tonight's live. So the last news that I read out was regarding Ripple's CEO. That was the last news of tonight's live, and also the questions that is running right now as well. If you're watching this for the first time ever, this was called the CMF Live. My name is Miles, and I'm hosting live that you're watching right now. The CMF stands for Crypto Miles Family. You can tune to this live Monday to Friday, 10 p.m. London time, where I share the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much everything you need to know about regarding going into this digital world that we're heading towards. This was episode 331 of the CMF Live. Episode 332 will be tomorrow. The disclaimer of this live, as always, was not financial advice, not political advice, and whatever I say is only for entertainment purposes. And on tonight's live, we talked about essentially Ripple's CEO predicting a stablecoin market space. We talked about also on tonight's live regarding US lawmakers discussing essentially crypto tax policies and throughout the laws. And also 16th of July is something that you should keep on your calendars regarding crypto taxes if you live in the United States. We talked about Japan's essentially real estate firm tokenizing up to $75 million worth of assets on tokenization. We also went through news regarding a new crypto scam that's going around right now. We should be fully aware of. We also went through news regarding Australia's CBDC market space. Right now, they're on phase 2 of testing, actually testing out an Australian CBDC in real use cases. We also talked about news regarding the Senate pushing for digital asset regulations by 2025. We also talked about on tonight's live regarding HSBC Bank in Hong Kong e-dollars. We went through news on tonight's live regarding Kraken, essentially exchange, expanding to Argentina with a new licensings. We talked about Elizabeth Warren once again being an absolute moron. We also talked about tonight's live regarding US bets on stablecoins. We went through news regarding on tonight's live Binance CEO perspective on the crypto space. We also talked about tonight's live regarding public companies, or how many public companies are right now in this Bitcoin bandwagon of adding it to their stocks. We also talked about Ant Group integrating USDC and the Chinese market space and the Hong Kong market space. We talked about a German bank coming forward and essentially issuing euro bonds on a particular crypto project. And we talked about tonight's live regarding the new OCC head, who is incredibly pro-crypto, which is incredibly great for us. And we talked about Trump and new tariff policies. So those are all the news topics we talked about tonight's live. This was episode 331 of the CMF Live. Episode 332 will be tomorrow. Before we go, obviously, let's go start the conversation first. Night Miles, thanks again, Miles. No problem. Free forever, absolutely no problem. Night Miles of CMF. Pablo, see you tomorrow same time as usual. Thank you, Miles. Lutia, see you tomorrow same time as usual as well. Hi, Miles of CMF. Golden Dragon, hi. See you tomorrow same time as usual. Good night, Miles and CMF family. I will see you tomorrow night. Thank you, Miles, for another great show. Let's go, funky brother. See you tomorrow same time as usual. Thanks, Miles. Good night, CMF. See you tomorrow. Orphan, see you tomorrow same time as usual. Thanks, Miles. Have a great night and see you tomorrow same time. Autistic, see you tomorrow same time. Thank you, Miles of CMF. Have a great night. Mike, see you tomorrow same time as usual, brother. Great live, Miles. Great news. Good night, Miles and CMF. Jason, see you tomorrow same time as usual. Good night, Miles and CMF. Thanks for all you do for us, especially protecting us from those scams. See you tomorrow. Free forever. See you tomorrow same time as usual. We appreciate you loads, Miles. Have a lovely night. All. Let's go, Lena. See you tomorrow same time as usual. Good night, Miles and family. Great live. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow same time as usual as well. Thanks, Miles, for another very good informative live as normal, mate. See you tomorrow. See you tomorrow, Addy. Same time as usual. Ian, see you tomorrow, same time as usual as well. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Let's go, Ian. See you tomorrow, same time as usual as well. Great live as always. Take care, Miles and CMF. Like, share, and comment and leave us for support. Yes, facts. If you have already liked and retweeted this live on X and put a comment outside the live, thank you so much, CMF members. If you haven't liked or retweeted this live, put a like, put a retweet, and put a comment outside the live, CMF members, so we can expand this family and help out a lot more people inside the crypto space. And there's a lot of big ideas that I have for the CMF, but we need to expand this group. So I need all of your help. I cannot expand this group by myself. I need the CMF's help to expand this group. So I always want you to like and retweet these lives. If you're watching this on X, if you're watching this on YouTube, like and put a comment outside the live as well, and put a comment outside the live on X. I need your help to expand this group because I have big plans for the CMF, but we need the bigger group to make them happen. Much appreciated for the time you provide to help us understand the news. Let's go, CMF. Shelly, let's go. See you tomorrow, same time as usual as well. Good night, Miles. Callie, see you tomorrow, same time as usual. Good night, everyone. Bull XLP, see you tomorrow, same time as usual as well. So, like, comment, share, retweet if you have already. Thank you so much. If you haven't, do it now. And also follow and subscribe if you haven't already. Do it now. If you have, thank you so much for following and subscribing. And welcome to the CMF family. Everybody, honestly, have a great day or a good night, depending on where you are around the world. I will see everybody tomorrow, same timing as usual, at 10 p.m. London time for episode 332 of the CMF Live. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where